Guys, Ryan with the Independent Investor Channel. 3 stocks that I've bought here recently to cover some strategic areas of emphasis in my portfolio in financials, specifically technology, and finally healthcare. We're going to roll these stock picks out rapid fire. Obviously, there was a deep dive into income statement, balance sheet, and cash flow statements on each of these. There was a strategic goal for me of increasing my dividend yield from a portfolio perspective, and also to increase some of the underweighted sectors in my portfolio. So you don't need to run out and just jump headfirst into these names. You want to make sure and doing your own due diligence. But I'm going to give you some highlights of each of these stock picks, okay? I'm not going to go into a deep dive on a YouTube video. I'm going to provide some of those deeper dives on some of my other venues that I put out through social media, mainly my Facebook group. That's going to be the place where we get into a little bit more deeper discussion as to why I entered into these. But I think for YouTube, I'm going to roll these out rapid fire for you guys so you can know what I've actually taken positions in here recently. The first being MetLife, okay? I opted for MetLife. Aflac was a close second. I already own what I feel like is the best of breed, which is Travelers, which is a Dow component in the insurance space. MetLife is about a $33 billion company trading at a whopping 4 times forward earnings. So on valuation alone, it got my attention. But what really struck me is the dividend yield. Payout ratio is about 35%. They've paid that out for about 8 years running here, and it runs at about a 4.91 clip. So for all you dividend investors seeking some level of yield, I was very satisfied with this yielder at just shy of 5%. Some of the highlights: they do offer their financial services, insurance, both domestically and international. It's the international piece that they're growing very steadily, and was very, very attracted to the shares here at this entry. So very excited to finally own MetLife and increase the exposure to financials. Next on the list is one that I've owned multiple times. I do own IBM within the Roth IRA, but we supplemented that share position with another 25 share position in IBM. IBM trades just shy of 12 times forward earnings with a whopping 5.35 dividend. It does have a 58% payout ratio with IBM, so very acceptable. About $108 billion market cap on IBM. I own all the other majors, I really do, and it was between IBM and Intel here, and I'm really trying to increase the dividend yield exposure in the portfolio as they've really proven their worth during the recent volatility with the pandemic, and being able to earn some income and reinvest those dividends going forward. So 21 years straight of dividend payouts to shareholders. IBM has been an excellent cornerstone in any portfolio. So I've been glad to own it, and it fit really nicely into my taxable account here, trading at just shy of 12 times. So finally on the list was the most expensive of the name, but it really came down to Medtronic versus another healthcare name, which was AbbVie. AbbVie, I really think, has some headwinds. I really did a deep dive on AbbVie and opted for Medtronic instead. I really think Medtronic, with its 4 segments of business, they're into cardiac therapies, low evasive therapies, robotics, and surgical equipment. 120 billion, 125 billion. It does trade at a little bit higher premium at 26 times. So a little bit hesitant there, but with the less dividend yield at 2.5. But this company is ripping on all cylinders. Margins for this company, 68%. Payout ratio, not quite as attractive either, at 65% on the payout ratio. They've been able to cover their dividend with ease for the last 19 years. Needed to beef up some healthcare exposure. I'm already exposed to a number of different names in healthcare, but Medtronic was one that I've watched very, very closely through the volatility. Not an optimal entry here. If you really were looking at it through the downturn, you would have got a better entry into the stock. but right here in the low 90s, I feel like it's got a lot of room to run to the upside. Street's extremely bullish on all three of these names, quite frankly, and I was happy to supplement my portfolio with these holdings. Guys, if you like the video, please help us subscribe to the message. Leave your comments at the bottom of the video of any stocks that you're looking at right now. Share the message with anybody out there that you know may like to come on and is new to investing. We do a good job of breaking down the information on the channel. Guys, thank you so much for tuning into the information, and good luck in your investment future.